Let's also present to you the first bank, private sector bank, which has cut its interest rates after the Reserve Bank's rate cut. Presumably, it will usher in more rate cuts. CNBC TV 18's Ritu Singh caught up with Axis Bank's Shikha Sharma and, of course, started by asking what prompted the rate cut.
So it's really been, the RBI action of cutting the repo rate, and frankly, much more than that, the actions around liquidity. So the RBI focused on saying that they want to move from a liquidity deficit regime to a neutral regime. I think that's meant that deficit numbers have come down in the market, and that has resulted in some easing of short-term rates. And since MCLR is based on marginal cost, it's allowed us to pass on that benefit of the marginal cost into the MCLR rate immediately.
So if I look at your one-year MCLR rate at 9.35 as it stands after the rate cut, is still somewhat higher than SBI or ICICI Bank or HDFC's rates, all of which stand at 9.2. You can't be an outlier in this market. So can we expect further rate cuts coming down, from Axis Bank in the near term?
So, we've always said that our rates are based on the computation of our various cost of funds and the elements that go into computation of MCLR, and that's how we've been consistent about it over a period of time. We will continue to be consistent about it. So as borrowing rates come down, you can expect our rates to come down. But, while RBI has said it's going to move to a neutral regime, we still have liquidity deficits in the market. It's come down from about 2.5 lakh crores to about 1.5. So clearly the money market situation has improved. But as those rates begin to come down, then our cost of funds would come down and we would reduce it. We really don't worry too much about exactly what everybody else's rate is. We have to fundamentally look at what our cost of funds are and how do we price our borrowing space.
So you're not worried about competition in the market?
No, you watch competition, but ultimately you can't drive your strategies based on competition. I think we have to be sustainable. We have to look at our cost of funds and price appropriately to get the right balance between cost and pricing power in the market.